Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for March 2nd, 2016. I am Frank Ochoa, aka PivotBoss, with your analysis for the session. Looking at the ES in a daily time frame here, we saw how significant the rally was in the previous session. A huge day here where we bounced off the 1921 level. Really, that was the level that was kind of the last saving grace there for the bulls, at least on a short-term basis, because below 21s would have opened up a return back toward 1886s and perhaps below. So defending that level and then squeezing the shorts over the last 2 days led to a significant rally through the previous week's high of 1968.75, and we're now holding just above that zone. Now, typically speaking, this flush to the upside here will likely continue to push higher toward 2004 to 2010. That's a target zone up there that we have on the charts here. But on the current session, after a major move like that, you typically see a session of digestion. So that's something to keep in mind for the day. So if you look at the ES in a daily time, in an intraday time frame, something you'll notice right here is how wide the pivot range is for the day. The pivot range spans basically, from here down to here, so that's a wide range. The previous range was only from here to here. You can see the difference in the width here, and that tells you how big of a move we had the previous session. Anytime you have a wide pivot range of this nature, it typically implies a trading range day, a day of digestion for the upcoming session. So today could be one of those sessions where we see mostly trading range action, new highs likely to be faded, new lows likely to be faded as price pushes back and forth within the range. So that's likely to happen today. I would say the previous week's high of 1968.75 is very important there. Bulls want to keep that ideally defended, or at least close back above that zone, because failure to hold above that area, at least on a daily basis, would imply a return to 5-day BPOC at 1942.5 with a shot at seeing a move lower. So right now, that's kind of the level that the Bulls want to keep price above as we head into the upcoming or the rest of the move to come, perhaps to the upside. So right now, likely to be mostly a trading range day. Bulls want to defend pullbacks as low as 56.5 or even into 50.5. Any pullback down into that zone could be a solid swing buy opportunity for a continuation into those upside targets, 2004, 2010, 2014, right in that zone. Now, if we take a look at crude oil, you can see here that price is holding above composite VPOC right now, 33.44. That's a shift up from the 32.60s, and right now we have a session here where we're holding right on it. Additionally, you also see that price has resistance off of 34.63, which is the midpoint of its key range here. You can kind of see prices have formed higher highs as it's come into this zone right here, and any push beyond the previous week's high price, call it 34.69, 34.70, opens up a likely squeeze event that could trigger a move back into the 37s. We do have a major LVN at 37 right here, so that could be a first test fade opportunity. But right now we're watching to see how this plays out from 33.44 to 34.67, 69, somewhere in that zone. Just call it 34.70. Right in that area, we're watching for some sort of breakout activity. Below 33.44 opens up a return back toward 31.68, which is the primary bear target for the week. Above 34.70 opens up a move into 35.48 with a shot at retesting the previous month's high at 35.81. So right now, kind of in that zone as we talked about the previous session. We're going to watch for a breakout from that range. Looking at the intraday time frame, you can see that price rejected off the previous week's high at 34.69. That was early in the afternoon, or late in the morning rather, heading into the afternoon. There was a rejection here. Anytime you reject off the previous week's high, the expectation is that you return and test the previous week's close price. That's 32.79. And given the current high of the day here, the projection is for a primary downside target right at around the same level. That's your primary target for the day. So any failure to see acceptance above 34s here, which is a key level, and a minor LVN would suggest a likely push downward toward 32.79. Given that price went bid through it and rallied toward the high, any retest of this zone could be defended by bulls for a return to value back toward 33.84. So those are a couple of ideas for the current session. Taking a look at gold futures, You can see here that price rejected again off of above the 1245s. That's very important. 1245s have seen nothing but rejection over the recent weeks. And now you see price dropped right into composite VPOC at 1225.30 and was defended in overnight trading. So right there, it tells you how important this zone is. We're right in the middle of the trading range. There's no real edge in this area. You can see the composite profile building out here. We've kind of filled in some of the imbalances, a little bit more to build out here until we get kind of a consensus value. So you could see price just continue to chop in this zone as it fills out more of the profile. But you can tell the profile has become much better defined, well-formed, and that could imply that we could be seeing some sort of expansion ahead. I believe that 1210 up to 1245 is the key. Expansion outside of that zone will test the outer edges of the range, which could force expansion, or at least an expansion attempt at that point. So right now, no real edge around composite VPOC as it chops around, but we could be looking at expansion soon. Taking a look at the NQ in a daily time frame, you can see a significant rally the previous session as well. Both the ES and the NQ rallied 180+% of average daily range over the last 10 sessions, which is huge. It tells you volatility has come back into the market, at least on one session, and when it comes into the market on a one-session basis like that, it could be the beginning of additional volatility to come. But typically speaking, after you see a major day like this, you usually see some sort of digestion, and that's what we're seeing right now in overnight trading. Very quiet trading activity. As a matter of fact, gold, the NQ, ES, CL, all trading 30 plus in the 30% range of average daily range heading into RTH, which is very, very quiet. So we could see more digestion. I would say any pullback into the previous week's high or that minor MCV between 42.87 and 42.93 offers an opportunity for bulls to defend for a shot at squeezing higher into 4,400. So if we take a look at the intraday time frame here, you can see how wide the pivot range is for the day. Very wide pivot range after the previous session's rally, and again, very similar to the ES, that implies trading range behavior today. So we could see back and forth behavior, something like this, build out over the day, throughout the course of the day, off of 43.11s. Again, any new lows likely to be faded back up, any new highs likely to be faded back down. So be careful here on trading breakouts because they could be faded. We're looking at digestion of these new price levels after the recent rally. That's usually what happens. You have to see how the market responds after a significant move this way. Typically speaking, you have to find acceptance and digestion of those levels, and then you see a further squeeze, or you see a failure to hold these levels and return to value. So there's a couple of ideas here, but for the most part, you want to see bulls defend, pullbacks to the downside for reversals back up. Any new highs likely to be faded back down. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.